Hi there, welcome to this week's market update. Okay, so as usual, what we're gonna do in such a video here is every week we'll kind of update like what's something that's interesting has happened for the past week, and share with you some insights. What are some things you also probably need to take note of moving forward. Okay, and definitely also looking into some of the major markets to share with you my analysis and what are some of the opportunities as well. Okay, so if you're first time over here on my YouTube channel watching this video, would appreciate if you enjoy it. Okay, give it a thumbs up, subscribe to the channel so that when I release a new video, okay, you'll be notified. And of course, for those of you who have been following and watching it, do let me know in the comments if you have been following my YouTube videos, the channels, and if it's able to help you, then let me know as well, because that's my objective and that's my intention, right? Okay, so without further ado, I'll show you my screen, walk you through some of the things that we would like to cover, and we'll see. Okay, so over here, first thing I'd like to touch on, of course, is we always pick like the 3 most interesting events that has happened for the past week. Okay, so over here, we're going to talk about same thing, okay? So you see here, the headline is investors suffer 60/40 blues as investment mainstay takes a hit. Okay, so for those of you who are very new to investing or even let's say portfolio management, 60/40 is a very common terminology that we use. Basically, what it means is that you have 60% of your portfolio allocated in the equities market and 40% of it allocated into safer asset, which is the bond market. Okay, and most of the time this is very standard kind of like portfolio allocation, and most of the time it's also considered as pretty stable and not much of a volatility, right? But recently, even a portfolio like this got hit. Okay, from of course by now you should know September is a down month in the equities market as a whole. Okay, so my perspective of this, of course, not really that surprised. There's no such thing as like sure win and profit all the time in the market. But just want to highlight that times are changing. Okay, back in I would say 2020 or even slightly earlier before 2020, all the way until like earlier this year, we're in a cycle where money is basically easy, right? The Fed is having a very low interest rate. We are basically printing money, okay, and that is easy, which means that the general equities market are gonna be rallying, fairly straightforward during those period of times. But moving forward, it's gonna be changing. It's gonna be different because we are looking at tapering soon. We are looking at rate hike coming in. Okay, as soon as perhaps end of 2022, we might see one rate hike from the Fed already. So we are changing from kind of like an easy money period towards a tightening period, and financial market tends to react from there as well. Okay, so moving forward, some of the perhaps for example, passive investing where you just buy and hold. Okay, maybe having a portfolio like this of a 60/40 might not be as effective moving forward going into 2022 and even maybe up to 2023. Okay, so you need to start to kind of like adapt your strategy. If you're looking at passive investing in the past, you might need to take on maybe a little more active role moving forward, right? So this is something that I thought would like to share with you my perspective, and you might want to start looking out for that as well. Okay. The other one here is very interesting. Okay, in just I think earlier, a month back in the beginning of September, we did release a video similar like this on the weekly update, sharing with you guys that we are looking at the Japan market, right? Nikkei ETF, and in fact we did take a trade on that and kind of like profit pretty decently off that trade. Okay, and right now we are seeing headlines coming in, right? Japan stocks suffer, okay, as new leaders suggest a tax rise. Of course, tax rise is not going to be good for companies, and companies are then perhaps affected. That will then translate into the equities market, right? Because essentially, corporates made up your index, okay, make up your equities. And I just want to very quickly show you, the chart over here. Okay, so you can see Nikkei, it's a pretty drastic move. Okay, but again, technical analysis do has its strength. Okay, and I'll probably touch a little bit more As we progress, okay, just wanted to highlight over here, you can see, you know, how it rallied, we managed to take that trade up, and how it then reversed pretty significantly as well, and we are able to protect our trade and got out with pretty decent profits from there. Okay, I'll talk a little bit on the technical portion and the lesson that I think all of the traders should take note of, but we'll discuss a little bit detail as we progress later on in this video. Okay, now the third article that I thought is pretty interesting is of course about the debt ceiling. Okay, so Janet Yellen did talk about how if the US government do not raise its debt ceiling by somewhere around mid-October, okay, the US will run out of money, and what that basically just means that it needs to shut down. Okay, and that's gonna again create certain panic and fear in the market, and it's not gonna be good for equities. Okay, so you definitely want to keep track like what is the decision. Okay, so over here you can see the headlines read like Senate votes to raise the US debt ceiling until December, but to date there isn't much of you know, announcement yet, so things are still not uncertain. Okay, and we're getting very close to mid-October, so we need to see, you know, a decision making kind of like soon. Okay, if not, then the market is going to be going into panic, and we're going to continue to see kind of like equities market really being very volatile up and down. Okay, and if let's say this is not kind of settled and the US goes into a shutdown, it's going to cause definitely more panic, and it's not going to be rosy for the equities market. Yeah. Okay, so do keep an eye on that moving forward, definitely very important. Okay, so with all this, let's jump into the technical chart to share with you a little bit in terms of like moving forward, what you need to take note of in the dollar, the equities, the commodities, Bitcoin, and then we'll spend a little bit of time to talk about Nikkei here. Not so much on Nikkei as a market, but a little bit lesson, okay, to cover on like technical analysis, how you can actually use technical analysis and what you need to take note of. Okay, so let's jump into dollar index. Okay, so for the past 1 week, dollar index basically has been in range-bound environment, and there are some key levels that I think it's crucial for us to keep an eye on. Okay, which is over here somewhere around 94.50. Okay, in terms of dollar index. So next week, likely we're gonna see the dollar strengthen a little bit, maybe come out towards 94.50. But for me, I'm more into looking for sell opportunity in the dollar compared to buying it. Okay, but of course it's not just about like, oh, if it hits 94.50 you sell it immediately. No, right? You need some kind of confirmation. Right? So for me, you know, you guys have, if you have been following, I always want to look out for how price reacts around that area that I'm looking out for. If it gives me a crawl pattern, you know, lack of momentum as it breaks the 94.50 or it approaches 94.50, over here on the dollar index, okay, do pay attention to that. Right, so let's see how it goes for the US dollar next week. Yeah, so I'm holding on to a bearish bias, but I need some kind of confirmation as price perhaps hit higher towards 94.50. Okay. In terms of gold, okay, I'm holding on to a bullish bias just to show you maybe on a higher time frame, like daily time frame. Okay, we do have kind of like a daily double bottom formation. We have a slight push up. We have a retracement coming back down. Okay, you can even see this as a potential smaller kind of inverse head and shoulder pattern. Okay, so I'm actually looking for upside in gold, and if it's able to kind of take off and break off this entire structure on a bigger piece, the upside is very, very attractive. Okay, but one thing perhaps you need to then take note of is, you know, there is that V shape or volatility kicking in a whipsaw, okay, from last Friday NFP. So you might want to keep an eye on how price is going to react off this zone. Okay, so likely it was going to come back towards maybe somewhere around 1745 area. We need to then see how price react off that. Okay, and what can also happen is this can of course come slower, maybe forming kind of like a triple bottom here, okay, before that push. Okay, so for me, downside is not that attractive. I'm more into looking for buy opportunity in gold, but again, I need some kind of confirmation, right? Okay, so that's on gold. Equities, S&P as a whole, okay, you can see past couple of weeks, basically up and down, right? Very volatile. So that's likely going to continue until we have some sense of clarity in the entire equities market. Okay, so do expect volatility to continue. Okay. Now, for me, I'm still holding a bullish bias on equities, but cautiously bullish. Okay, because when the Fed eventually starts its tightening process, which includes tapering and hike rate, we're gonna see equities suffer. Okay, for sure. It's more of like what extent is gonna suffer, right? So I'm gonna be very cautious looking at it from a bullish perspective until the rate hike starts, or until perhaps slightly next year, where we are into the tapering process. I will need to keep a very close watch on the equity side of things. Okay, but for now, looking at the technical portion on S&P, right, which is the general equities market, what we can expect is that if price were to continue to consolidate here, okay, there's a good chance this would then break above that trend line structure. And if that were to happen, then we'll probably see the bullish momentum going in, and we can see S&P reaching back to its 44. Let me drop that in, right? Reaching back to its 4550 level, right? The previous high over here, okay, which is its all-time high. Okay, so I'm slightly bullish on the equities, but again, we'll need to see how it goes. Ideally, by maybe Monday or Tuesday, if it forms some kind of consolidation over here, great. Okay, a breakout of that pattern kind of give us that confirmation that this can go higher. Okay, Bitcoin is also very interesting, right? It managed to break off that previous high here, which is 53,000. Okay, and what's happening is you can see it breaks off very strongly as an impulse, and it's doing its consolidation now. Okay, now that is crucial because that means that there might be a chance, or say higher probability, that Bitcoin can continue higher. Okay, so where can it likely go after a consolidation? It can continue all the way back towards its previous high around 65,000, and that's its all-time high. Yeah? Okay, so I think crypto side of things, with Bitcoin rallying, okay, most of the other coins are probably going to rally as well, like Ethereum, maybe Ripple. Okay, some of this like VET probably are going to shoot higher. Okay, because if Bitcoin were to rally, general crypto market tends to go up as well. Okay, so do pay attention to Bitcoin if you're someone who is looking to invest a little bit of a portfolio into the crypto market. Okay, but one thing to be cautious is, of course, it's still very volatile. It's still what I call a speculative asset. Okay, so do not go big. Just allocate a small portion of it into the crypto market, right? I do have a portion of my portfolio into that as well, but it's a relative small amount compared to the FX side as well as the stock side. Okay, now last one here, right? In this video, I just wanted to take this opportunity to cover a mini lesson using the Nikkei market. Okay, so what I want you to see is, technical analysis has its strength to guide us in doing some kind of forecasting and, of course, projection. But at the end of the day, right, when you look at the technical chart, we are looking at patterns, right? We are trying, using various methods to go and pick out a pattern that tends to repeat itself over and over and over again. Okay, so in this chart here, there are generally a few things that you want to kind of like pick up, right? And that's where I want to use this opportunity to give you some nuggets, okay, some insights into technical analysis. Okay, so first thing here is the pattern, right? Take a look at this pattern, right? It went up and then it does a very, very long consolidation. Okay, we call this a correction. So we have a very strong push, we call that an impulse, followed by correction. And most of the time that suggests that it's gonna likely continue to the upside, right? So you can see that pattern did play out on Nikkei. Of course, it's not gonna only happen in Nikkei, but this is a pattern, which means if you identify this pattern in, dollar, in FX, in commodities, in stocks, in indices, you can actually anticipate that. Okay, so whenever you see a push up, you see a consolidation, you expect it to continue higher. Okay, now it can come in various scale, right? So I'll just zoom in a little bit. You can even go back like a video that I published earlier in September, okay, which is exactly about 1 month before today. Okay, we talk about this. And the pattern here is what? It's the same. Okay, you get a very strong push, you get a consolidation here. So what do you expect? You expect this to continue higher. Okay, so that's the pattern that I want you to really take away with you. Okay, now the next thing that you want to look out for is what? Okay, if this were to break, where would it likely go? Okay, most of the time it'll come back to like significant high, and that's exactly what it did. And not only that, you can see it's coming very, very perfect, right? Picture perfect. Of course, not all the time is going to be as great and as nice. Okay, but Nikkei did it perfectly. Okay, now, and what's the next thing I want to cover here is, yes, we expect it to come up and break this. Okay, but the part here is while we are moving up, okay, somewhere around this period, a lot of media comes in and start reporting about how Nikkei has been shooting, you know, maybe on social media, maybe on news article. And what happened? Okay, guess what? A lot of retail traders, when they start to receive this information, okay, the market is probably already here, right? And what happens? They get FOMO, fear of missing out. And then they like to jump into the market because they think that, oh, it's going to continue higher. Okay, after such a move, the momentum is there. Let's all buy it. Okay, and what happened? It gave a reversal. Okay, of course, okay, there are fundamental reasons that drives the price, but I just want to explain from a technical portion point of view, right? If you see an impulse, okay, just an impulse, a very strong move, okay, it can go up, it can come down, but basically a very strong momentum move, do not jump in immediately, okay, because things like that can happen, and we call it a V-shaped formation. Okay, how to avoid it? Basically, don't jump into the market when you just see an impulse. Give it time. Okay, so Bitcoin here is a very good classic example of what we mean by give it time, right? You see an impulse push, okay, you don't jump in here. You give it time. Why? Because if you want to buy it, you basically need to see that consolidation, right? You need to wait for the pattern that we talk about. Then it tells you, can give you a confirmation that it can go higher. Okay, so that's that mini lesson that I taught. You know, Nikkei here is really giving us that opportunity to talk about it, right? And I would strongly suggest that what you want to do is, if you have not watched the video that we posted 1 month back talking about Nikkei, I think the title of it is like focus on Nikkei or something like that. Okay, you just go to my YouTube channel, look for the video about 1 month back, beginning of September. Okay, with it, talk about that and reference it to the chart today. Okay, and that's how you can pick up and learn from, you know, what we do here on a week-to-week basis. Yeah. Okay, so I hope that helps. Okay, so with that, you know, we hopefully this week's episode here give you a little bit more insight. Okay, especially with us sharing with you and talking about Nikkei, going a little bit into the details of the technical analysis. Okay, hope that, you know, can benefit you a little bit in your trading as well. Yeah, so that's all from me in this episode over here. Okay, once again, if you enjoy and you benefit from that, would just really appreciate if you can give this video a thumbs up, right? That would help the YouTube algorithm to reach out to more traders, and in return, of course, you know, kind of help me to grow my YouTube channel as well. And of course, drop a comment below. Okay, you know, if you have questions, drop it below. If you know, if this video really benefited you, you know, drop a simple kind of like thanks, right? That also help the YouTube algorithm. Okay, so engagement does help, right? And would really appreciate if you can do that. Okay, so that's all for me. All the best for the week ahead, and I'm pretty sure we'll meet very, very soon again in another video. Okay, so all the best, and I'll see you guys again.